Investing in regional bank stocks definitely has its unique caveats. There's a mix of risks you take on when diving into this sector of the market. First, you've got interest rate risk. Regional banks are like a roller coaster enthusiast living for the thrill of the ups and downs. They make more money when interest rates go up because they can charge more for loans. But when those rates drop, their profits typically follow suit. If you're not prepared for this kind of ride, maybe it's best to stay off this attraction. Then, let's chat about credit risk. This is like dating someone with a bad credit score. It's all fun and games until you realize they can't finance a pack of gum. When the economy tanks, people and businesses sometimes can't pay back their loans. Regional banks may have a less diverse portfolio than their bigger counterparts, making them more vulnerable when borrowers default. Don't forget about regulatory risk. The financial industry is like a game of Simon Says, but played with government agencies that can change the rules anytime. New regulations or policy changes can directly impact how regional banks operate and their profitability. There's also the competitive risk. Big banks have the pockets to spend on technology and marketing, like that cousin who always had the latest gaming console growing up. For regional banks, competing with the big guns means they need to keep up without the same resources. And how can we overlook liquidity risk? It's kind of like planning a wedding and hoping you sell enough plasma to cover the caterer's deposit. If everyone decides to withdraw their money at the same time, regional banks might struggle with the cash crunch. Lastly, we have management risk. Smaller banks are like indie movies. They can either be hidden gems or total flops, often depending on the directors. Good management can navigate risks and capitalize on local opportunities. Bad management, well, not so much. From my place in Portland, Oregon, you get a keen sense of what can happen if these risks aren't managed properly. The Pacific Northwest saw a financial shakeup during the 2008 crisis, and it's clear that having your financial wits about you is crucial. So yeah, investing in regional bank stocks can be lucrative, but they carry a tool belt of risks that you'll need to be comfortable wearing. And hey, diversity isn't just a buzzword in Portland's culinary scene. Spread those investments like you're at a food truck pod, and maybe one bad taco won't ruin your meal.